G'day everyone. Hope you're well. I hope you're able to start enjoying some of these newfound freedoms as we come out of lockdown, and you're able to get out and see your family and friends and enjoy some good times together. Amazing to think it's quarterly report time again. Another fantastic quarter for not only markets but also portfolios. Really great to see the good returns we've seen across the board over the rolling 12 months flowing through the portfolios and returns and balances for you guys as our clients. It's interesting to see that we're starting to see some real headlines being developed. People are starting to, pick when the next correction is going to be, and so I guess this is a pretty opportune time to really ensure that you're sticking the strategy and looking through a lot of the noise that's happening at the moment. Clearly, we've heard headlines around sort of the debt ceilings. We've heard headlines around Evergrande, Chinese position, resource prices, interest rates, inflation, those sorts of things. And I guess we just wanted to take this opportunity just to remember to the importance of enjoying what we've achieved over the last 12 months, but also staying the course and just ensuring that we're reviewing the portfolio on the basis of would we buy it now, and reviewing it based on the appropriateness of the asset allocation for your particular situation. So I guess where do we see markets over the next 12 months? And I guess we're a little bit more positive than some of the headlines we've been seeing in recent times. And it probably comes down to three main components, I suppose, that we see driving markets over the next sort of 12, 18 months. Clearly, we're seeing the reopening of Australia, New South Wales and Victoria in particular. And what we take comfort in is the recovery that we've experienced overseas as Europe and the UK have opened up under the vaccination scenario that we're planning to experience over the next sort of 6 or 12 months. And clearly economies have reacted really positively to that, which has flowed through to markets. So that gives us some confidence around the near future. Obviously, there's been a lot of talk around interest rates, and I guess it's important to sort of remember the words actually coming out of the US Reserve and also the Reserve Bank is that they clearly don't have interest rates on their radar over the next foreseeable future. And while there is discussions around inflation and what that effect could have on interest rates, it's pretty clear to just listen to the actual words that they're using, which is that they're unlikely to raise rates in the near future. And I don't think they're going to do it in any great shock, because the last thing they're wanting to do is see a correction in markets through an unanticipated interest rate rise. Thirdly, I guess, and one of the big stimulus situations we've seen really from the GFC is the amount of stimulus support that's been put into the economy and subsequently markets. And once again, I guess, an economy or a recovery, it's never going to be a smooth or predictable recovery. And reserve banks and the like and governments around the world really are very conscious of this. And I guess we're still hearing and analysts are predicting that this will continue for a significant period of time to go. So it's highly likely that they will slow that stimulus at some point in time. But what we have to remember that they don't want to shock markets. So this isn't going to be a surprise. Necessarily a surprise stopping. So I guess they're just three particular things we wanted to bring to your attention as you're reading your quarterly reports, and why we're quite cautiously optimistic about how markets should perform over the next 12 months. So I hope you enjoy your report, and if you've got any questions, feel free to get on the phone. We look forward to speaking with you soon. Cheers.